Welcome to Just Minding My Business Radio, where we are moving at the speed of God, learning what we didn't know we didn't know. I'm your host, Ida Crawford, so grab a pen and paper and get ready for information that you can use. Welcome to another episode of Just Minding My Business. And I hope you all had an amazing day. And I have Miss Charese Adesalu back with us to get into the 2018 tax changes. And Charese is the CEO of Prodigy Accounting Services, and she has over 20 years of experience. She's a certified CPA, and her company is Prodigy Accounting Services. So, yes. Charese, I want to give you the floor so that you can talk to us about 2018 and what we can expect.
Wonderful, wonderful. Thank you. Hi, everyone. Because I'm just here just to talk about, because I know, like, the big rave and the word on the street is that there's been a lot of changes to the tax laws for 2018, and there's been some changes to the tax laws in 2018 that everyone needs to be aware of. So, saying that, let me first start off in 2018. Okay, during the time of our tax filing season, because we've always known of the separation of the exemption amount, which is the amount that you get for each person that you claim on your tax return, which includes your spouse and all of your dependents and also your taxpayer. It's a set amount you get every year on your tax return. Well, in 2017, the amount is $4,050 per person. And also we understand that you can also get a standard deduction amount on your tax return, and that's based on your filing status. So, for example, in 2017, it's $6,050 for single and so on for head of household, qualified widower, because it's a different amount. Now, in 2017, those two amounts are separated. However, in 2018, there's been a change with that. In 2018, the Congress and Trump, well, because I'll just state Trump administration, they have voted in not to include the exemption amount on your 2018 tax return. So in 2018, you will no longer see on page 1 of your 1040 tax return, whether it's a 1040 EZ, 1040A, or just a plain 1040 or 1041 or 1040 NR, you will not see the exemption amount you can claim for each individual you list in your tax return. What they've done is that they've combined the exemption amount and the standard deduction amount into one amount that you'll claim on your tax return on page 2. So, for example, like I said, in 2017, because the exemption amount for single is the exemption amount, for everybody, for every dependent and for every person on your tax return is $4,050, and the standard amount is $6,500. In 2018, your standard deduction amount for single will be $12,000 because they've added the regular standard amount in 2018 because it'll be $6,500 plus an extra $5,500, which would have been your exemption amount on your tax return, but now it's combined into one, and it's called your standard deduction. So they're going to combine that amount for your filing status of single, married filing jointly, married filing separately, and head of household. Now, for those amounts, like for a single, because it'll be $12,000, married filing jointly, because it'll be $24,000. Married filing separately will be $12,000 now, and head of household will be $18,000 for your standard deduction amount. Now, a standard deduction is not a refundable credit, which means that it's not actual money on your tax return. What it does is that because it reduces any tax liability you might have and it increases your tax refund amount if you're getting one. That's what it does. So, again, in 2018, they're going to combine it into one amount. That's a surprise and shock to everybody. Now, also, earlier, Ada and I, we were talking about, we've heard on the news, like these whispers and these rumors, which are true, that in 2018 you should be seeing a little increase in your paycheck. And, we just talked about we haven't seen that increase yet. Hopefully we'll be able to see it and feel it before the year's out. But
Hope
so. Because the reason for that increase in your paycheck is based on the 2018 new tax brackets. And 2018, what they've done is that because they've lowered and they've gotten rid of certain tax brackets, because in 2017 and prior, because the tax brackets were 10%, 15%, 25%, 28%, 33%, 35%, and 39.6%. And those tax brackets, they were based on your income and your filing status. But since the Trump administration made some changes and they're trying to alleviate so many tax brackets, like for people to have, the new tax brackets for 2018 is 10%, 12%, 22%, 24%, 32%, 35%, and 37%. So they've gotten rid of, like, the highest tax bracket of 39.6%. But that tax bracket only applies to people making over $240,000. So with the changes in the tax brackets, you might see like a little increase in your paycheck based on which bracket you're in. Most people fall into like the 22% pay range, tax bracket, which is, if you file single on your tax return, that means that you make between $38,700 to $82,500. Because if you file married filing jointly on your tax return and you all both bring home between $77,400 to $165,000, if you file head of household and you bring home between $51,800 to $82,500, or you file married filing separately, then your income will be between $38,700 to $82,500. The reason why you see an increase is because in 2017 and before, you fell into the tax bracket of 25%. But in year 2018 now, your new tax bracket is only 22%. So that difference of that 6% is a little bit of increase you'll see throughout the year in your paycheck.
Okay.
Any questions about that? Because I know it ain't much, because it might be enough to buy you like a Snickers bar or maybe like an ice cream cone. But it's a little, maybe like a large fry, but it's a little something extra you'll have in your paycheck. It ain't much, but it's a little something.
Okay. Now, at the end of the year, how is that going to work out in terms of when you file your taxes? That increase.
We'll see. Because it probably won't affect you that much because, let me say this real quick too, Ida. These changes that we're voting on for 2018, these take in effect in 2018. So, for example, when you file like your 2017 tax return, none of these new laws will make any changes or affect your 2017 tax return. Because I just had to clear that up because people thinking, 2018 taxes, well, that means that my 2017 return will be different. No, it won't be. Your 2018 return will be different. Okay? So going back to what you asked, because it really won't change your refund that much, based on how you fill out like your W-4 form at your job. So, like I said, this is what I tell people. This is like a whole nother little topic, but like a little tidbit, is that when you get a tax refund, when you file your tax return, throughout the entire year, you've given the Internal Revenue Service and the state that you file with, you've given them a loan on your money interest-free So, honestly, it's best to, when you file your taxes at the end of the year, to either break it even and, not get a refund because it says that you're paying just enough taxes that you should be paying, nothing more, nothing less. Or, get a refund that's maybe between like $500 to like $1,000, saying that you've gotten most of your money that you've needed and that like you're supposed to get based on your tax bracket throughout the year. Because, some people wait for that big tax return like to get at the end of the year. Like if you're not getting like an earned income credit or, you don't have a business, you need to make sure that you filled out your W-4, which is the federal tax withholding form, and fill out your state tax withholding form correctly. And like you can calculate what it should be based on when you file your taxes. So, for example, let's say, because on your W-4 that you put on there that you want to claim 2 people. But at the end of the tax year, when you file your tax return, you get back maybe like $2,000 or $3,000. Honestly, because it would have made more sense for you to get that money during a year when you worked, instead of waiting at the end of the year to get your money, because you've given the federal government an interest-free loan on your money throughout the year. So saying that because they've benefited from that money during a year and you didn't, you can get that money during a year just by maybe increasing your withholdings on your W-4 just to balance out during the end of tax season. Just make sure you don't owe anything. And some people say, well, I make so much money, and like, because I don't have anybody to claim or no dependents because I'm owe anyway. That's not true. This is what you can do. You have you have a lot of options, but because I'm going to give you 2 of them. One option is that during like the first 6 months of the year, you can increase like your withholdings to a certain amount just to get more money in your paycheck. And then around September or around August, you can decrease it down back to 1 or 2, because that'll balance it out so that when you file your tax return, you won't owe anything or you won't owe anybody, because you got like a nice sum during the 6 months of the year. And then at the end of the year, because you sacrificed and you gave them what you should have gave them during the first 6 months, so like when you file your tax return, everything balances itself out. That's the first tidbit. Second tidbit is that if you have a business, if you have a legitimate business, and when I say that, because I mean that it's not a hobby, with the Internal Revenue Service, the Internal Revenue Service classify a hobby as a business that you've had for about 5 months, and the first 3 years of the business, you don't have any income. Everything is a loss. That's called a hobby. And like when you file your profit and loss statement on your tax return, which is a Schedule C, and for the first 3 years of the first 5 years of your business, not the first 3 years by itself, but you've been in business for 5 years, and that first 3 years, because you're showing a loss, and not a profit, that's telling the IRS you're just doing, this is just a shell that you're claiming not to owe any taxes or to get a big refund. Because like when you have a legitimate business, every expense that's related to that business, whether it's going out, whether it's dinner with the client, whether it's doing a presentation and you're providing food or some type of entertainment, or driving, mileage, car maintenance, you can claim all that stuff on your tax return as a business expense, and that'll increase the refund that you get during the tax year. So those two tidbits, they can help you out, during the tax season. And, because having a business, you can sell Avon. You can sell socks. You can make soap in your bathroom. Just as long as the business is a legitimate business and it's not a hobby. And again, because a hobby is classified during the first 5 years of your business, within that 5 years, 3 of those years you don't have income, it's a hobby. And the Internal Revenue Service, they might question you when you file your profit and loss statement for that hobby/business on your tax return.
Okay.
Okay. All right. Let's get on back to 2018. Sorry about that. I'll take a little bit. Okay. And now, because I know, like, some of my clients call me up and they said, "Girl, because I heard that the mortgage interest deduction you can claim on your house is going to be gone in 2018, and I can't afford that because I pay so much interest." That's not true. In 2018, this is what's going to happen. In 2018, you can only take mortgage interest up to $750,000 on your tax return. Prior years, 2017 and prior, because it was $1 million. Like, for example, if you paid mortgage interest of $1 million, you could claim the whole $1 million on your tax return as mortgage interest. But it's been decreased down to $750,000 of interest for your mortgage for 2018. So you can still, claim your mortgage interest if you itemize your deductions on your 1040 tax return.
Okay.
Now,
let me just stop you right there. Now,
okay.
What if you are a real estate investor and you have quite a few properties that you say you're paying taxes and stuff on there, that? How does that work for the business person who's into, buying properties? Okay.
Now with that, let's talk about that. Now, right, because I'm going to jump off a little bit. This is about taxes and about having a decent business structure for your businesses, especially in real estate. In real estate, you need to have your real estate business not listed as one of your side hustles. If you're in a real estate and, because you want it to be legit and you want to get loans, you want to get business loans and business credit in your real estate business, your real estate business should be set up as a corporation, either as an S Corp or just a C Corp or a LLC. When you have it registered as a corporation, you can either do a personal tax return, 1040, and do a Schedule C on there. And when you pay interest for your rental properties, because that's your business, there's a line on your Schedule C profit and loss statement for your 1040 personal tax return that says interest paid. You can claim that amount on your Schedule C. You can claim that interest amount on your Schedule C tax return that you've paid for your rental property. Just as long as you don't live in the properties, you can claim those income-producing properties, interest on that Schedule C. Or when you have set up your business in the right business structure as an S Corp, a C Corp, or a LLC, you'll be able to file a corporate tax return. And that corporate tax return has on there block for interest that you've paid on your credit cards for your business, that you've paid for your properties. Any interest that you've paid, you can claim that whole amount on that corporate tax return. And that's how corporations, not all of them, but that's how corporations are able to, how can I say it nicely, are able to be efficient on their tax return, and they don't have any tax issues because they separate their entities correctly. So again, real estate investors, make sure that you have your business set up like it's a business, because the thing is that when you have a business, because you're able to build up your business credit, and your business credit affects your personal credit. And when you're able to have a decent structure for your business, and you're able to get business credit, because you're able to do so many great things for yourself and for your business, because you're doing everything in your business and business / corporation. So with that interest, you can write it all off on your tax return when you have your real estate business set up like a corporation.
Okay.
Did I answer your question?
Mhm.
Okay. Mhm.
Okay.
Yeah. Okay.
So any other goodies for 2018?
yeah. Let me say. Let me see. Two more things, real quick. Okay. One thing that I want to talk about is we talked about previously during the call just about the 2017 changes. We talked about you can write off your general sales and use taxes in 2017. That's going to be a no-go in 2018. They've gotten rid of you being able to write off your general sales and use taxes on your 2018 tax return on your Schedule A. That's going to be gone. So the only taxes you can write off on your itemized deduction, Schedule A, are your property taxes. Like property taxes, that includes your real estate taxes. That also includes like your big ticket items, like purchasing a car, sales and use taxes, RV, motorcycle, boat, sales and use taxes. Also, you can still claim your state taxes, I believe, in 2018. Because if you itemize for the tax year, because the state taxes withheld that you paid out of your paycheck, that's carried over to that Schedule A form, and that state taxes that you pay for the year is included on your itemized deduction Schedule A form. Okay. This is just a brief summary of deductions that are disappearing in 2018. One of them is the casualty and death loss. That's going to be gone in 2018. Also, unreimbursed employee expenses, because I know during our conversation about 2017 expenses, you can write off the unreimbursed employee expenses. Like, for example, let's say that you pay for parking, and that's unreimbursed. You can't write that off in 2018. Tolls, you can't write that off in 2018. Like, if you're not reimbursed by your employer and you got to pay for tolls, you just got to pay for it. You cannot claim that on your tax return. Uniforms, attire, you can't claim that in 2018. Another one that'll be gone is that you can't claim tax prep expenses. That's going to be gone in 2018. Moving expenses. I'm sorry. Go ahead.
Now, that's just for people that are working.
That's exactly working people.
Okay.
Right. These are deductions on your Schedule A, and Schedule A deals with employer expenses, deals with your mortgage expenses, deals with property taxes, and your medical expenses. These expenses that are disappearing, they're all in your Schedule A form for your 1040 tax return. Also, moving expenses, because that'll be gone in 2018. If you have to move for your job, like, for example, let's say that you live in California and your job moved to Idaho, and you had to pay for those expenses, like a moving truck, plane ticket, you can write that stuff off on your tax return. That's going to be gone in 2018. Because if you're moving, based on your job, you're just moving based on your job. You can't write those expenses off. Try to get reimbursed somewhat through your employer, because you can't, because Uncle Sam will not pay you for that anymore. And that's basically it. So there's some more stuff, but like you said, there are so many changes that maybe we could do like another segment on it.
Yes.
Yeah.
Yes. And definitely, if anybody have any questions, please reach out to Charese. Can you give us your information?
Sure. Let me start off with my phone number. My contact number, or the business contact number for Prodigy Accounting Services, is 443-752-8886, or you can send us an email. You can send an email directly to me, because my name is Charese Adesalu, and my email is CAD as in David, ES as in Sam, ALU at FLI-INC.com, or you can send an email with your questions or your concerns to our general email box, which is Prodigy, PRODIGYACCT1 @yahoo.com. Or, last thing, you can go to our website, www.fli-inc.com, and just click on the contact button on your top right-hand side, and just leave us a question there, and we'll be in contact with you within the next 24 hours. Promise you.
And you can also access her information from assistercircle.org, because she's a proud sponsor of the show. So you can also click on her link there, and that'll take you straight over to her website. So that's another way of getting in touch with her. But
yes, it is.
This
Thank
is
you.
a lot of stuff. I've got so many notes. We definitely going to have you again, because I'm sure there's a ton of stuff that people are going to want to know about. And what I suggest is everybody email Charese at the email address, or you can click on our link on the sistercircle.org page. She's right on the front page. You can go there as well and get your questions in, so that way the next time we meet with her on the show, we can address those questions not only with you but to our other listeners, because I'm sure they'll have the same ones.
Correct. Definitely.
Sure. So one more time, Charese, give us your information again.
Sure. Phone number is 443-752-8886. My personal email address is CA, D as in David, ES as in Sam, ALU, at FLI-INC.com. General inbox is Prodigy, PRODIGYACCT, just number one, at yahoo.com. Or go to our website and look at all our wonderful information that you'll benefit from at www.fli-inc.com. Thank you, Ida, so much for giving me the opportunity, just to share this information with everyone, just to make sure that people benefit from what they need to benefit from when it comes to tax season.
Absolutely, and I thank you for saying yes, because we definitely need to hear this information. And, a lot of times most people are not knowledgeable about taxes.
Right.
They totally rely on the professionals because there's so much work to it, because I recall doing my own taxes one time, and I said, never again.
I hear you.
It's such a headache. And
so
we need professionals like you. And
Thank you.
I said before, Charese has over 20 years of accounting experience, and she's also part of the Financial Literacy Incorporated, and combined there is 60 years of financial and accounting experience. So I definitely do trust what you have to say will follow. I know nobody that has 60 years.
We're very seasoned. Very seasoned. We don't call ourselves old. We're just seasoned. That's what we are.
Absolutely. And seasoned is good.
That's right.
All right. Well, thank you so much, and we truly appreciate you taking time out of your schedule to join us today, and looking forward to hearing more about the 2018 taxes going forward.
Great. Me too, because I love to share, and thank you also for, taking the time just to interview me and just allowing me to share. Excuse me, I have a little cold. This, great information with everybody. Thank you so much. I appreciate you. Thank you.
I appreciate you too. Talk soon.
Okay, take care. Take care, everyone. Bye-bye.
This show is brought to you by the amazing women of A Sister Circle Empowerment Network, ASIN LLC, where we are never in competition, but always in collaboration. And our valuable sponsors, Prodigy Accounting Service, Next Generation Accounting to get you where you need to be. Contact them at prodigyaCCT1@yahoo.com or online at www.fli-inc.com. Prodigy Accounting Service, Next Generation Accounting to get you where you need to be. Contact them at prodigyaCCT1@yahoo.com or online at www.fli-inc.com. Ready to plan for your retirement? Contact Game Plan for Retirement. Call 410-902-0464 and schedule a free consultation. That's Game Plan for Retirement, 410-902-0464. Interested in becoming a sponsor for Just Minding My Business 24/7 radio? Or would you like to know what a Sister Circle Empowerment Network, a SIN LLC, is all about? Contact us today at asistercircle@gmail.com and visit our website at asistercircle.org. That's ASISTAS circle.org. Contact us today at asistercircle@gmail.com and visit our website at asistercircle.org. That's ASISTAS circle.org. Voiceovers for A Sister Circle Empowerment Network provided by Ruth Haskins, voiceover actor. To fulfill your professional voiceover needs or to receive her current professional demo, contact Ruth at 443-620-4115.
Thank you for tuning in to Just Minding My Business Radio. I'm your host, Ida Crawford. We hope you enjoyed the show and appreciate you stopping by. Many blessings to you and yours.